Welcome to another edition of Fitness Friday Positives. We're on Fitness Friday. It is always the best day of the week. Gotta love it. Folks, I know last week's episode was rough, very challenging content. It was challenging, as I'm sure it was as challenging for you to hear as for me to deliver. But again, in the spirit of enlarging your vision, panoramic view in 22, want to challenge you to think about just some of the more challenging issues that face the fitness industry and certainly fitness facilities. And you'll recall last week, and I started to digress into a very brief story time, and I said, well, no, it would have been inappropriate last week, just given that content. I said, I'll table that for next week. But you'll recall last week's episode, I mentioned briefly that one of the stories or one of the articles that I highlighted involved Element Fitness in Shreveport, Louisiana, which has since closed. But prior to it becoming Element Fitness, it was Quail Creek Fitness back in 1996. And I alluded to the fact that I took a one-day break from the Barksdale Air Force Base Fitness Center and worked out at Quail Creek. And then immediately the next day, I was back at my own gym. But there's an interesting story time behind that. There was, at the time, a very good friend of mine just ultimately was such a great friend of mine and just so supportive. And it was a type of situation where it could have been more than friends, but we were just he was such a champion of mine, and I just look back and just am so grateful. But anyway, he invited me to his gym at the time, which was Quail Creek. And so he got me a guest pass. And so I went in and I worked out on my own. But listen to this. So you know my whole little story of work. It is a solo event. Me going to the gym. It has always been. That was an instance where that solidified that fact. Because when I went back through, when I was going through that process of he had to call the gym and, get me a guest pass. And then I had to go in there and then get the guest pass and go work out. It was just so much red tape. I remember at the time it was just so much red tape, and it opened it just for me personally. Again, I'd had 2 years under my belt of just being solo working out. This is great. And I realized that day when I was like, okay, visiting this gym, this is his gym. But then the prospect at the time, I so remember thinking, oh my goodness, like what if I have to work out with him? And I was like, no, this is this little workout situation. I'm just going back to Barksdale. It's gonna be great. And so I literally think back to, and I just marvel at how recognizing that workouts for me have always been for almost 28 years a solo activity, and the fact that I have been able to maintain impenetrable boundaries around that, and that it is my me time, and it has been from day one. But that is an instance where I certainly was challenged, because I was like, oh, he's such a great friend and he's so cute. And this is a funny thing, and this is a funny addition to that story, and then we're gonna move on to today's content. And that is, one time he met my mom. So I was out shopping, he happened to be at the same store, and then my car broke down. And so when I talk about embarrassing, looking back, I was just so embarrassed. But anyway, so he gave me a ride home. I don't know where my dad was, but so he met my mom, and so he and my mom were talking. And literally every time I go back to Louisiana, I think about this, and she and I have a laugh, and she feels bad now for what she said. And so he and my mom were chatting, whatever, and then he left. I guess he was only there maybe 20, 25 minutes or so. And then after I left, I said, Mom, isn't he so cute? And listen to this. He said, Rachelle, he may be cute, but he's a dummy. And that is just, oh my goodness. So I just like, you know what? I don't know where my dad was that day, where he was shopping or what he was doing, but I'm glad he wasn't there, because that would have been something else. And so, but just had to share that. But that is an instance. So look, 6 months in 1994, I had to hear, you like to go to the gym because you like to go and talk to other guys. And that was a guy I was dating at the time. Then all of a sudden we go back to 1996, bam, had the opportunity, potential workout partner, and I was like, no, it didn't work out, it didn't happen, but we remained great friends, and I just, I'm grateful for the opportunity to have had a one-day guest pass, went in there and worked out by myself, checked it out, saw what was what. But I was like, nope, I like the freedom of being, in the gym by myself. And so went right back to that in 1996, and have certainly been going strong ever since, folks. But funny story time, funny story time. So we are all challenged. We are all challenged. Our likes and dislikes, preferences, we are going to get challenged, and I just had to share that, and it would not have been appropriate for me to share that last week, given the seriousness and the tragic nature of some of all of the articles that I shared last week. But folks, moving on this week. So it has been 2 years of COVID now, officially 2 years of COVID, and we are all here. And so we need to recognize how fortunate, how blessed we are, and be grateful and be thankful and remain committed to persevere during these times, folks. And so as I've alluded to on a number of episodes since COVID first hit our shores here in 2020, the greatest threat, certainly to our lives, but certainly to the fitness industry, no greater threat than COVID-19. Fitness facilities in particular, there were shutdowns, and so many, unfortunately, have not and did not survive. And so I want to spend some time during this episode just highlighting some examples, and looking at some entities that saw an opportunity while the gyms were shut down. I want to kick off this episode by highlighting a club industry article, and it involves Planet Fitness. And so this was published and it's attributed to club industry staff, February 24, 2022. The title is Planet Fitness 2021 revenue increases 44% over 2020, but not yet back to 2019 revenue. And so I'm not going to read all of this. I have to give my disclaimer. It's got a lot of investor-related information. And it seems like this press release is heavily investor IR focused. So I'm not an investment advisor. This is all of the examples that I'm going to be giving today are merely examples. As you know, I like to share examples and highlight what is going on in the fitness industry. And in some cases, these discussions that in these companies that I highlight are or involve publicly traded companies. So I just always want to preface that and give that disclaimer. But these articles provide some good insight in terms of the rebound, in terms of the impact of COVID, and particularly on facilities and fitness facilities, and some of their strategy and what they've been able to do in order to kick off this episode with Planet Fitness. So we know that they're rebounding quite nicely. I'm going to skip the first three paragraphs here. Going to go on and discuss memberships and club growth a little bit. I'm just going to discuss a little bit here and then move on. The company ended 2021 with 15.2 million members, an increase of 1.7 million members since the end of 2020, and an increase over its 2019 membership numbers of 14.4 million members. Planet Fitness ended January 2022 with 15.6 million members, surpassing the company's pre-pandemic first quarter 2020 membership peak. Generation Z, people born between 1997 and 2012, made up the fastest growing demographic group in Planet Fitness's 2021 membership, according to the announcement. Planet Fitness CEO Chris Rondeau attributed the growth in Gen Z memberships during the pandemic to school sports leagues, after-school activities, and even entertainment options being halted or closed for part of the year. Even into 2022, the growth in Gen Z memberships has continued above pre-COVID levels. Despite the basic membership for Planet Fitness running $10 per month, about 62.5% of members hold a Black Card membership, which runs $22.99 per month, which allows members to use any of the company's gyms, as well as use amenities such as tanning beds. Black Card memberships are growing, Rondeau said. Planet Fitness opened 62 new locations in the fourth quarter and 132 total in 2021, bringing the system-wide total to 2,254. In 2019, Planet Fitness added 261 locations, which was a record at that time for the company. That's all I'm going to read because there's a discussion there, fourth quarter results and all of this income information. That's not the purpose of these episodes, but just that gives you some insight in terms of what is going on with Planet, some of where they're seeing the growth in terms of Generation Z, how even in the midst of some of the closures of COVID, how they actually saw some opportunities. And in terms of where Chris Rondo said they attributed the growth to Gen Z, reading this again just to highlight it, memberships during the pandemic to school sports leagues, after school activities, and even entertainment options being halted or closed for part of the year. So even in the midst of COVID, and this is something I said in 2021 and certainly 2020, but even in the midst of the biggest threats, it's just in many cases there can be opportunities that can be uncovered and can be leveraged for an organization or an entity. So this is an example of that for Planet Fitness. Want to also highlight another example involving iFit. So as I talked about, particularly in 2020, as we think about, we go back a couple of years, we talk about how fitness facilities were closed, and as I talked about then, the opportunity was very strong in terms of at-home fitness. We saw the explosion of Peloton, we saw at-home fitness, equipment manufacturers, we just experienced a lot of growth in 2020, certainly in 2020, but also into 2021. But there has been a slowdown. Why? Because now when you think about at-home fitness, when gyms reopened, that became a threat. The reopenings became a threat because what happened? All of a sudden many people said, well, I want to go back to the gym. I want my classes. I want to be in the facility. And so there was a rush of people signing up for gyms, returning to their gyms. And so that was a threat for the at-home segment of the fitness industry. And so I want to provide some insight into that particular dynamic and what is happening and what is going on there, just to give you just a little flavor to kind of balance that in terms of, we know how hard fitness facilities were impacted, but now we're seeing the at-home segment face struggles as well, the post-opening struggles as well. So Club Industry published this article. Pamela Kufal, content director, published this article March 3rd, 2022, entitled iFit raises $355 million, settles lawsuit, lays off staff. So again, a very lengthy article, not going to read all of this, but want to give you just a little flavor, a little taste of what's going on in this particular segment. iFit, Health and Fitness, Logan, Utah, raised $355 million in capital, settled a lawsuit with an investor, installed new leadership, and laid off an undisclosed number of staff members, the company announced. iFit, which offers connected fitness and interactive content with its iFit and Sweat streaming platforms, includes brands FreeMotion, Nordic Track, Proform, Weider, and 29029. So iFit co-founder, chairman, and CEO Scott Watterson has moved out of the CEO role but continues as chairman, according to the announcement about the funding. Chief Financial Officer Steve Barr and Chief Experience Officer Mark Watterson are now co-presidents. So I'm going to skip that because they're talking about financial performance. Okay, I'm going to skip that one. Here we go. The company went through a round of layoffs in December and a second one in February, affecting an undisclosed number of employees. The February layoffs were necessary due to supply chain issues and escalating costs, including cost of manufacturing and development, according to the company. When businesses grew too fast, let me digress here, then I'm going to come back and I'll start over again. Sometimes I digress when I see something that triggers a thought in my mind, and that is, I've had this conversation, I've highlighted this previously regarding the struggles of Peloton. And so there was, they ramped up very fast. They had to. There was explosive demand in 2020, and then they ran into some struggles, eventually. But iFit faced similar issues. So that's one I wanted to highlight this. When businesses grow too fast, there can be a lack of focus and rapid escalation of cost, Logan shared. For instance, COVID accelerated explosive growth of the company, and the cost of supply chain contributed to expenses. In order to safeguard the business over the long term, we have made some difficult but important decisions regarding cost efficiencies. Although these actions are difficult, they will make iFit stronger and leaner so we can invest substantially in our core brands, innovation, and member development. So I'm not going to talk to, there's more here about litigation, I'm not going to highlight that. But you can see how, again, brands who exploded in 2020, and again, NordicTrack, has been around for years and even decades. And so, but we can see just how what a challenge companies like these are facing compared to the explosive growth that they saw in 2020. So just a challenging time, certainly for this particular segment, and wanted to highlight that. Next, Peloton. Got another update here on Peloton. Continues to have some challenges. So Pamela Kufal as well, content director, published this, Club Industry, March 1st, 2022, entitled Peloton Isn't for Sale, May Lower Pricing, New CEO Says. Again, not going to read all of this, just going to read some highlights. After speculation of a sale of Peloton, layoffs of 2,800 people, cancellation of its first U.S. plant, and a change in the CEO, the new CEO of Peloton, Barry McCarthy, said the company is not for sale for the foreseeable future, he told the Financial Times in mid-February. However, McCarthy added that shareholders of the public company would have the final say on a sale. Later in the month, he told CNBC host Jim Cramer that he is reviewing pricing of the company's products to try to expand the customer base and increase revenue. Skip the next paragraph. His goal is to make Peloton more than a bike company, intends to make it a connected fitness company, he told the Financial Times. Here we go. And let me digress here for a quick minute. You'll recall a few episodes, maybe 2 or 3 months ago, and I talked about how Walmart, that with growth, the explosive growth of the Walmart Plus program, how they had brought over, they've got an individual in a key leadership role for Walmart Plus, came over from American Express, and how he's been able to leverage his background and build some partnerships, and then particularly around the loyalty marketing aspect of that, and then strengthening that program and just how they continue to grow. Here's another example of that, where they brought an individual over, as I'm about to allude to now. McCarthy came from Netflix and Spotify, which offer digital streaming services and subscription business models. McCarthy shared with CNBC host Jim Cramer on February 23rd that he is looking at the pricing of Peloton's products, as well as the $39 per month membership fee to help grow its customer base. I think there's enormous opportunity for us to flex the business model and dramatically increase the TAM, which in parentheses, total addressable market, for new members by lowering the cost of entry and playing around with the relationship between the monthly recurring revenue and the upfront revenue, McCarthy said in the interview. The company recently introduced Peloton Lane Break, its first gaming-inspired experience for its Bike and Bike Plus. The game allows all access members to speed along a 6-lane track while music plays, using the resistance knob to change lanes. Peloton reportedly will introduce a connected rower and a new stream product to go with its bikes and treadmills. I'm going to skip that last paragraph. But yet again, another example where during the height, highlighted Peloton a number of times in 2020. So the height with gyms closed was a very big opportunity for Peloton. They experienced explosive growth, couldn't keep up with demand. And so when gyms reopened and many people flocked back to their gyms and their classes, it was a very big threat. And Peloton has certainly, persevered through various challenges here in the last few weeks and months to overcome just some of the difficulties, but just wanted to highlight that. So again, during the height of the pandemic, Peloton, in the midst of this huge opportunity for them, for the company, was able to say demand is so high for our bikes. Price sensitivity was not a very big issue for people. People were buying the treadmills and the bikes left and right. But see, when gyms reopened, look what happened. Yeah, look what happened. It became, the pricing. All of a sudden, people are saying, do I want to spend all that money on a bike? I could just get a gym membership, or I could just get another type of bike. So, These are just some of the cyclical natures and like the cyclical challenges that faced basically, around that, economics 101, supply and demand, but also just the demand of the pandemic. And now that's waned so much, now got to evaluate issues and aspects of the business model, such as pricing and things like that, actual product offerings. So here's another example, iFit as well as Peloton, where you're starting to see some of the challenges facing this particular segment. And another example I want to highlight as well is Beachbody. Beachbody, for those who don't know, and Beachbody has a segment of their business that is a multi-level marketing company in the health and wellness segment. And this whole segment is one that I do not cover typically, but in the spirit of having a panoramic view for Fitness Friday in 2022, I have spent a little time focusing, just to enlarge your vision and help you all see and understand what's out there. And now you have companies, such as Beachbody that operate in this particular space, but wanted to highlight this particular segment as I talked about week before last, pardon me. So I talked about that segment, health and wellness oriented companies in general, but certainly in that multi-level marketing segment experienced a great deal of growth. Many of them did in 2020. Why? 2020 and 2021, and much of that growth continues for many, not all. But why? Gyms were closed. People were working from home. Schools were closed. So for them, many of them were able to say, well, your facility's closed, you're working from home, we have these products, we have these supplements, we have this, we have that. And so there was a lot of growth in that particular segment. So just, I'm not going to talk about just some of the overall growth, but just want to highlight Beachbody as an example. And so to reiterate the point, this is not, again, this Beachbody is publicly traded, so none of these companies that I've mentioned today, even though because many of their detailed information is highlighted because they are publicly traded, including Beachbody, Peloton, and so just keep that in mind. This is just just good information to reinforce some of the points that I'm making. So this was published by Club Industry Staff, March 7th, 2022. So the title of this is Beachbody reduces staff by 10%, reports 4% Q4 2021 revenue decrease. So again, this was a segment that really experienced a lot of growth when the pandemic happened, when facilities were closed, and so demand is tapering off for this particular company and many others that operate within that segment. So this is very investor focused, and so I'm not going to read a lot of it. I'm not going to highlight certain points, but I just want to give you a flavor of some of what's going on in this particular segment, particularly experienced by this company. So, as Beachbody Company Incorporated in El Segundo, California, reported its fourth quarter 2021 revenue decreased compared to fourth quarter 2020. It also announced it was streamlining the business, which involved layoffs in first quarter 2022. The subscription health and wellness company's fourth quarter 2021 revenue was $216.3 million, a 4% decrease compared to 2020, but a 31% increase compared to 2019. Its 2021 total revenue of $873.6 million was an increase of 1% over 2020 and an increase of 16% compared to 2019. So I'm going to skip that. And so there's been some changes to their overall strategy, and I want to highlight these couple of points and then move on. The one brand strategy consolidates the company's streaming fitness and nutrition offerings into a single platform, Beachbody On Demand, and markets its connected fitness bike under the Beachbody brand. This consolidation will increase the Strength of Body, or BOD's, BOD's platform with the addition of OpenFit products and talent to BOD's on-demand library, enhance the company's value proposition to its customers and partners, and simplify its go-to market strategy, the company said. Beachbody is also implementing other strategies to increase profitability, including enhancing its marketing return on investment. As part of this strategy, the company will target historically high return media and narrow its focus to pursue only performance marketing opportunities that are immediately profitable and accretive to cash flow. Additionally, Beachbody will further leverage its coach micro-influencer network, which continues to serve as a competitive advantage that consistently delivers the most profitable and productive subscribers. Last paragraph I'm going to read here. Leveraging its database of more than 2.8 million subscriptions and insights from its data and analytics team, Beachbody has identified opportunities to increase lifetime value by reducing friction in the e-commerce purchasing funnel and maximizing the ROI, or return on investment, on new content releases and nutritional supplements. So the nutritional supplements, that part of the business is the multi-level marketing arm. And so I'm not going to read the rest because it's talking about fourth quarter and full year 2021 results. But there it is. There it is. And just for compare and contrast, so this article that I just read, just to restate, published on March 7, 2022, I'm going to read another article that deals with Beachbody that was published November 17, 2021. So you can see trends and patterns. So Beachbody reports 17% decrease in Q3 2021 revenue. So the Beachbody company, Santa Monica, California, pulled in third quarter 2021 revenue of $208.1 million, a 17% decrease compared to third quarter 2020, but a 6% increase compared to third quarter 2019, the company announced on November 15th. Carl Daikeler, Beachbody's co-founder, chairman, and chief executive officer, said, "While we continued to execute on our strategy to drive growth, the third quarter proved more challenging than forecasted. Our results reflect a confluence of external factors." I couldn't resist. Why? External factors. All right. Including softer at-home fitness demand as consumers grew tired of social distancing and a challenging media environment that did not meet our disciplined ROI, or return on investment, requirements, coupled with a short delay in product launches from September to October. Although our digital subscriber base remains strong and engaged with high levels of retention, we did not acquire new subscribers at the rate we expected. So I'm not going to read the rest. Very just very investor focused. Not going to read any of that, so going to skip that. So those highlight just the challenges that this particular segment of the fitness industry. See, there have been challenges all around. All right, the bricks and mortar, the traditional fitness industry experienced challenges, continue to experience challenges, but COVID 2 years in. But now the segment that saw a lot of growth and opportunity during the gym closures, then in 2021, as gyms reopened and things were starting to, people getting, going back to the office, going back to work, stores reopening, and all of that in 2021 for a number of months at that particular point. Now the challenges come for that particular segment. As that article I just alluded to said, the softening of demand. And so there it is. We always want to provide some balance and some insight. So we've talked a lot about the challenges in the bricks and mortar. Now you can see other segments that have also, home-based type of entities that it's been a challenge for them as well. So I want to close this episode out by highlighting, and a couple of weeks ago when I was mentioning some aspects of the health and wellness oriented segment of the multi-level marketing industry. And so I've got an article here because, as I've alluded to, probably 2 or 3 episodes. Like I said, I don't cover that segment here on Fitness Friday because, full disclosure, and I've stated before, I'm not a believer in that particular MLM, multi-level marketing business model at all. But again, in the spirit of the spirit of exposing you to this particular segment, which experienced a lot of growth, even before COVID, but certainly during COVID when gyms were closed. So, I'm very aware of that segment and just how big it is and what's there and some of the major players. But also want to put some numbers behind that in case you're not aware. When I talk about how large this segment is, when I talk about just the health and wellness oriented companies and how there are hundreds of thousands of representatives promoting independent distributors, independent business owners. So the different companies, they have different names for them. And so we have these individuals out here promoting these products and these supplements, these health supplements. And so that's a whole discussion I'm not going to get into. I've talked about that a little bit before. But I want to close this episode out by highlighting, because so you can hear some real hard numbers of some of these at one company in particular, of how big these organizations are. So we talk about impact. When you talk about that, it's important to realize just this particular segment, this particular segment. So this involves Herbalife. Remember, I talked about, read an article. It was talking about the Herbalife nutrition clubs. Read that on a previous Fitness Friday year. And so this article is entitled Live Conferences Return. Herbalife Nutrition selects Detroit for 2022 extravaganza. So this appeared in D-Business, or Detroit Business magazine, but it's called D-Business. Tim Keenan wrote this. It was published July 28th, 2021. All right, so it says Herbalife Nutrition has selected Detroit to host its North American extravaganza on July 15th through 17th, 2022, according to the Detroit Metro Convention and Visitors Bureau. And so, as I've alluded to a few episodes, probably a handful of episodes over the years, I'm actually a volunteer with the Detroit Convention and Tourism Bureau, and I will not be participating as a volunteer. They always send out emails, calling for volunteers for various events, many of which are actually sports related. And so they will send an email out and have sign-up forms, but for a group this size, I'm sure they will be looking for people. But I'm one where it's, if I don't agree with a model or a concept or something like that, as I mentioned before, I have no part in it. I don't want any part. I'm not just whatever. So this article goes on to state, Herbalife Nutrition has selected Detroit to host its North American extravaganza on July 15th through 22nd, according to Detroit Metro Convention and Visitors Bureau. The event will take place at Ford Field, where the Lions play, and is expected to attract more than 25,000 Herbalife Nutrition independent distributors. Attendees will occupy an estimated 13,600 hotel rooms throughout the metro region. Our company will roll out the red carpet to welcome the best-in-class company that will contribute approximately $11 million in direct spending to our region, says Claude Molinari, President and CEO of the DMCVB. We are pleased they're bringing their vast network of independent distributors to experience Detroit. So, not going to read any of that. There's some more paragraphs. Going to skip that in the interest of time. But I found another article, and I hit a paywall when I clicked on it. But I was able to, when the first time I clicked on it, I was able to get this information that I'm able to pass along to you, that puts some additional figures behind how large this particular company is. In the North Carolina, the Winston-Salem Journal, this article was published April 9th, 2019. And so the title of this is Herbalife. Company has about 8 million customers, 550,000 distributors. So this is one company, but also keep in mind this is it's a global distributor network. So 550,000, globally, but this is just one company, and there are hundreds of these multi-level marketing companies, but certainly um, many of which are in the health, wellness, and fitness space. So you can just see how large these organizations are. So for Metro Detroit, they will have Herbalife, which will have 25,000 attendees coming to our area. And so for their annual conference, and it looks like, they haven't had an event since, with COVID, the COVID shutdown. So that's that. And as I talked about, again, so for traditional bricks and mortar fitness facilities who may have their own supplements, or even many of them, many, particularly private gyms will sell, those kind of protein bars, protein shakes that you could get in mass retailers. And so one thing from a competitive analysis standpoint, competitive strategy standpoint, you have to recognize that, with these independent distributors, numbering in the hundreds of thousands for just one company, and there are a number of different companies. You got Beachbody, you got Plexus, you got so many that works. There are just so many of those companies. Herbalife. So there's just so many that operate in that space. So it's just important to know, just to recognize that those folks are there. They have independent distributors. They're out there. They're promoting. But like I stated, I don't. That industry for me personally is off limits. I don't agree with the model, but out of respect and what I do here, I put that aside to be able to bring this information to you in this particular format, and just share, so you can just be aware of what this industry is. But they have faced challenges as well with gyms reopening and all of that. But also within that particular, the multi-level marketing segment, litigation, class action litigation. There's just been a lot there, and that's why I encouraged you, was it 2 or 3 weeks ago, to really take a look at that particular segment and see there's a lot that goes, warning letters from the FTC or the Federal Trade Commission. There's just a lot that goes on in that particular segment, just to be mindful of, to be aware of. But I just wanted to share that with you. And so, folks, that is all I have for you today. Next week, I'm going to kick off, as I typically used to cover marketing in the summer, but I moved that up earlier in the year. I think I started doing that last year. So I'm going to highlight marketing, some marketing examples, and I have a lot of them. So it's probably going to be at least 2, if not 3 episodes on marketing. I have so many examples. And so we've got everything from tonal to, there's just so many examples. Tonal to Planet Fitness, Edge Fitness, and Edge is my gym. But I can't play favorites, but I will acknowledge that they have done, there's a lot that they have done. And I can't cover it all, so I've got to spend some time thinking about what exactly I'm going to cover. And so, we'll do that. And so we've got just a number of examples, some outside of the fitness industry, like I always do, just to provide clarity. And so a lot of times it's easier to see things sometimes when it's outside of the industry. So folks, there's just so many good examples, and I cannot wait to kick off that short marketing series next week. But until then, remember, I am positively passionate about your fitness, success, and leadership. Make it a great